Canadian mortgage delinquencies are climbing, but there may be some relief that's on the way. The federal government recently released and announced the Canadian Mortgage Charter. If you're someone that's been struggling with paying your mortgage, I've spent hours diving deep into this so you don't have to. This video is going to let you know how you are going to be protected under this new charter, and make sure you hang around to the end too, because there's a surprise twist on this information related to how effective this is really going to be. My name is Darren, a realtor in Surrey, BC, and team leader of the Germyn Group. This channel is dedicated to providing expert tips, market insights, and real estate advice to help homeowners, home buyers, and home sellers in the area that we serve. If you find the information in today's video useful, please consider subscribing to our channel so you are on the front line of all the information you need to know to be more successful in your endeavors. So, mortgage delinquencies in Canada have climbed from their historic lows in Q2 of this year, 2023, according to Equifax, and they're still lower than where they were pre-pandemic, pre-COVID. However, as you likely know if you're a homeowner, we have a big problem in not only Surrey, not only British Columbia, but in this country about the soaring mortgage rates and the cost of living, specifically the cost of owning a home in this case. To give you an example, in the spring, March of 2022, because rates were at emergency levels, the overnight lending rate from the Bank of Canada was only 0.25%. Now, fast forward 16 months later, where we saw incredible rate increases back to back to back. Come July 2023, that same overnight rate is now up to 5%. This is an increase of 4.75% in just 16 months, which has completely shocked most homeowners that are on variable rate mortgages or anybody that's looking to renew their mortgage in the short term. To put that into context as well, that's a 22-year high on mortgage rates. Let's make this a little more real and paint a little bit of a picture. Imagine you were someone that bought, an average home, maybe $750,000 anywhere in Canada, let's say in early 2022, and you put 10% down because you're a good little saver, and whether you got the right advice or not, you decided to go with a variable rate mortgage at the time. Well, back when you bought, your first mortgage payment would have been roughly $2,600 a month. That number, however, now, because of current interest rates, has jumped to over $4,350, an increase of nearly $1,750 per month, or $21,000 in just 1 year. Here's a question for you watching this video. Whether you're a homeowner, a wannabe homeowner, how much money do you make, or how much money do you think the average family in BC has? I'm going to give you the answer. Statistics Canada reported that, at least in 2021, the average BC household was making just over $99,000 per year. This means an increase in a mortgage of roughly $21,000 is almost a quarter of that household's income going directly to paying interest on their mortgage. This is crazy. So, swinging in on a vine like Tarzan in the jungle comes the federal government at their fall economic update. The federal government has just introduced something called the Canadian Mortgage Charter. The purpose of this video is going to be to let you know what is in there, how it might affect you, and really just generally how effective is it going to be. Introducing the BC Home Buyers Course, your ultimate guide to buying your first home with confidence and precision. With over 3 hours of comprehensive video content, you can learn at your own pace whenever and wherever you want. You can sign up by visiting bchomebuyers.90daysout.ca or checking the description in this video for more details. One of the reasons they likely introduced this mortgage charter is because, well, mortgages are incredibly confusing. To the point, if you've never seen it, you're definitely going to want to check out a video that we did all about the mortgage secrets that we wish everybody knew that the banks likely aren't going to tell you. This goes into a deep dive on some of the ways that the banks really stick it to the consumer and get all the money out of your pocket. So if you're interested in that, I'll leave a link below in the description for it. If that's a little far down the road and you're not interested in protecting yourself against a mortgage right now and against the banks because maybe you're not in that position, you do definitely want to check out this video here about just generally the mortgage brokers versus getting your mortgage from a bank and which ones you might want to consider. And bear with me, it was filmed a long time ago. We're going to update it, but there's some really good information in there nonetheless. So definitely check that out. So what are these 6 principles that have been introduced by the federal government? Well, let's hit them one by one. Under this new charter, the banks are expected to allow temporary extensions on the amortization period for mortgage brokers. This may or may not surprise you, but this is already happening when a mortgage is due for renewal. There's no mention here about whether the rate could increase or not, and it may apply differently for whether your mortgage is insured or not insured. There's a couple caveats to this though. Well, not all lenders do it necessarily. It has to be requested. There could be different rules for insured or non-insured mortgages, and your rate really could increase. But as I mentioned, this was already kind of happening. You could do it at the renewal time. You may have heard on the news that there's many people out there that are seeing their mortgage amortizations increase if they're on a variable rate mortgage, as an example, and they're now up to 40, 50 years just because they're not able to pay off any of their principal on their mortgage anymore. So this one, while interesting, great for a headline, it's already really kind of happening. What's the next one though? The next one is exempt insured mortgage holders from requalifying under the stress test when switching lenders at the time of mortgage renewal. This was put in to make sure that the current bank you may have your mortgage with can't take advantage of you when it's time to renew your mortgage, meaning they offer you a way higher rate than market because they know that you can't get a mortgage at another institution because you won't qualify. You would have to requalify to get your mortgage at that other institution. Now, CMHC has confirmed that this was already a long-standing policy by OSFI, so it's not necessarily anything new. I guess the only really thing to consider with this particular term is, well, other banks, they don't have to take your business. They're not forced to lend you a mortgage. They get to pick and choose who they choose to lend money to. So while it's very interesting and seemingly it's great, I'm not really quite sure how that's going to function because the government can't force a bank to work with just anybody. There's so many factors that go into it, whether you actually repay your money, you've got good credit, how much you owe, and how much of a risk does the bank actually think you are if they're going to lend you X amount of money. So it'll be interesting to see how that one plays out. The next is to allow borrowers to make lump sum payments to avoid negative amortization or sell their principal residence without incurring prepayment penalties. There's a little bit of a twist at the end of this video, but I'm going to position this in try telling the big banks, who obviously make tons and tons and tons of money, that as someone that's borrowed money from them, well, you've signed a contract, you've agreed that if you break your mortgage or want to take your mortgage somewhere else, you're going to pay them a penalty, which oftentimes can be quite substantial in the tens of thousands of dollars. Try telling this big corporation, this big bank, that they're not getting their money. Now, that's if you want to sell your home and break your mortgage and not have a penalty. When it comes to the lump sum payments, well, the truth is most banks already allow for this. You normally can do 5%, 10%, 15%, some as high as even 20% of a lump payment towards your mortgage each year. So if you check your mortgage statements, you likely can already do that already. And if you got 20% sitting around and you can pay that towards your mortgage, power to you. That's amazing. This again is one of the many reasons you want to make sure your mortgage is explained incredibly well to you. So again, that video about mortgage brokers versus the banks and questions to ask, you're going to want to check that out. Now there's 3 other pieces of this charter, and I'm going to hit them a little bit of rapid fire here. Under the charter, the banks are expected to waive fees and costs that would have otherwise been charged for mortgage relief measures. The charter also requires banks to reach out to homeowners 4 to 6 months in advance of their mortgage renewal to inform them of affordability options. To be truthful, again, this is already really kind of happening because, well, they want you to come back and get your mortgage with them rather than go off to another lender. So they're usually sending you mail and giving you phone calls well in advance of your mortgage being due for renewal to try and capture your business again. So that's kind of standard. The last under the charter is that the banks are expected to waive interest on interest when mortgage relief measures result in mortgage payments that fail to cover interest payments on a loan. That one's awesome because you shouldn't be paying interest on top of interest. That's really kind of unfair, right? So that's a great one that's been introduced in this mortgage charter. So I promise you a little bit of a twist, a little bit of a kicker that I wanted to put into this video. And well, here it is. This mortgage charter that was just introduced, it's not even law. It is 100% voluntary on the banks and whether they choose to participate in it. The only time you will see this mortgage charter published is in the fall economic statement that just came out. It's really rules and expectations, kind of asking the banks to play nice with anybody that they've lended money. Now, as I mentioned, banks may be doing a lot of this already. I don't want to kind of put a dark cloud over what the banks do. Obviously, they make money, but they loan money, and so they deserve to make a little bit of money as well. The idea of making a contract with the bank and then having all this money that's due to them and then telling them you want to change the terms of the contract, I find it very hard to believe that the bank would actually agree to that. Lots of things in life are voluntary, just like ordering a salad instead of that big juicy hamburger for lunch. Even though you know it's better for you, you still end up ordering the burger sometimes. Anyways, I'm curious what you think about this new Canadian mortgage charter and whether you think it's going to have any effect at all on how the banks deal with anybody that's having a tough time with their mortgage and trying to avoid delinquency. Leave a comment below, let me know what you think, and while you're down there, the rest of the links are in there for everything we mentioned in this video. Hey, look, I appreciate you watching. Don't forget to subscribe so you don't miss out on any of the great content we're releasing on a regular basis, and we'll look forward to seeing you on the next one. Cheers.